A week after the Reserve Bank governor was selling the virtues of the Australian economy, a member of his board has raised serious concerns. Businessman Roger Corbett says Australia is an economy in some distress. At the same time, National Australia Bank Chief Cameron Klein was pointing a finger at the critics for damaging confidence. The talk may be harming the domestic mood, but the Australian dollar continued to strengthen, causing some to ask whether it was overvalued.
Reserve Bank Governor Glenn Stevens was singing the praises of the Australian economy just last week, but one of his board members doesn't seem to have the same song sheet.
I'm not talking in any way on behalf of the Reserve Bank. That's a prerogative of the governor. But as a general citizen and as a businessman, yes, we've got an economy under really quite some, I think, distress.
Roger Corbett attributed Australia's good growth and jobs numbers solely to mining, pointing to a range of other sectors in trouble, and he slammed the timing of the carbon tax's introduction as wrong and unjustified. But one of his big business colleagues was busy highlighting the importance of confidence while criticising those who undermined it.
I strongly believe that this constant reference to two speeds is damaging confidence. It's not giving the full picture of transition. It's making the assumption that what's going on now has never occurred before.
But foreigners seem undeterred, pushing the Australian dollar to a 4-month high against the US currency. Australia's terms of trade, while still relatively high, has fallen. Prices for many of Australia's major exports are down at least 10% this year.
We're beginning to see quite a disconnect between the currency and commodity prices. Look, if that continues over the medium term, that's somewhat akin to a monetary policy tightening,
which will squeeze Australia's economy even harder, forcing a cut in interest rates.
We run a couple of models which suggest that the currency is probably fair value around about 90-95 US cents, but that doesn't take into consideration what's going on in capital markets. That's purely based on the terms of trade and the real interest rate differential.
In 2008, Japanese households spent $34 billion on Australian debt and $72 billion in Europe. That's almost double to $61 billion for Australia, as opposed to just $20 billion for Europe.
That's a good example of how we've seen a phenomenal change in portfolio allocations in Asia.
And a reason many expect the dollar to remain high.